camera, lights, Netflix. The stock is on autoplay since late September, with shares gaining almost 50%. And the streaming service racked up the most Oscar nominations this year, ahead of Sunday's big awards show. But this weekend could be more important for Netflix than for traditional studios. Julia Boorstin joins us live from the red carpet with the details. Hi, Julia.
Well, Tyler, the Oscars is a high-stakes test of whether Netflix can earn the ultimate honors from the Hollywood establishment. Netflix has more riding on Sunday's Oscars than any other studio, both in terms of reputation and dollars spent, investing an estimated $70 million on awards marketing. It has so much riding on it because Netflix has the most nominations of any studio, 24, including 2 for Best Picture, followed by Disney and its Searchlight division with 22 nominations, then Sony with 20, and Warner Brothers and Universal with 12 and 11, respectively. Now, Netflix's film with the most nominations is Martin Scorsese's The Irishman. Nominations include Best Picture and Best Director. Netflix spending a reported $160 million to produce this film and an estimated $25 to $30 million on award season marketing for this movie. So why is Netflix spending so much on marketing for awards? Well, Netflix says it isn't just targeting Academy voters, but also promoting its premium content to its subscribers and potential subscribers. Now, Netflix CEO Reed Hastings has said, and analysts agree, that awards are valuable to Netflix because they boost the company's ability to draw top talent. And the competition for talent is fiercer than ever, with so many new streaming services vying not just for subscribers, but also for stars and content producers. Guys, back over to you.
All right, Julia, thank you very much. So the question is, will Netflix continue to lead the way among the streamers? It is a business that is getting more crowded, it seems, Steve, every day.
I didn't think this was going to have a stellar out of the gates beginning to 2020, and it's done the opposite of what I thought it would do. I thought Netflix has. I thought people would start worrying about valuation stretch. We had on the back of not the same companies, but on the back of WeWork testing all valuations and over bloating and no earnings. And if you look back in the rearview mirror, Netflix had an incredible run, and I thought it was going to start petering out of growth. But it just seems to me that the market is rewarding it for being the only pure play in streaming. My other play is Disney. I think that they're going to really start gaining market share. And of course, Apple, big splash, has more subs than Hulu and Disney already out of the gate. So Netflix, Apple, Disney.
Kind of overlooked there, Apple, on that point. I didn't know that.
Not a lot of content, but they're roughly 33 million or so in subs.
Who wants the last word on this one before we move on to our final trade?
Well, they beat, and international subs were part of it. I think the expectations into that quarter were not terribly good. Reed Hastings has been very kind of encouraging about the competitive landscape, but basically saying the move away from linear TV helps us all. I still think this company needs to be profitable, and I think that's what this comes down to. But good for them. I mean, with those nominations, there's no question they're producing content, but what's the cost and what's the cash burn? Because the other guys are not burning cash like this.